in bracket, the speculator can therefore take a position 5 times, his investment. The last line, and that's an important line, the broker encourages such transactions to get higher brokerages, on the increased volume. He safeguards, I have not explained this last line, I will start from here. He safeguards his position, the broker, please put down, the broker safeguards his position, by adopting a technique known as mark to market. What have we seen till now? Somebody has got into the market with 20 rupees, he has got into a position of 100. Broker, just a small recap for the friends. Broker says, come, India Bulls was offering 10% margins. You walk in, can you realize what is 10% margin, Alamgir? What do you mean by 20% margin, my friend? If you want to take a position, let me explain again. Sorry, I didn't communicate. You want to take a position of 100 rupees on the market, you need to pay only 20% of that exposure. So if you want to take a position of 1 lakh on the market, my friend, you need to give me only 20,000. I allow you to come and take an exposure of 1 lakh. My call to you is, suppose I say margin is only 10%. You have to pay only 10,000. Suppose you have 20,000, you will take a position of 2 lakhs. India Bulls was doing this. See, everybody wanted clients, so they encouraged. Why don't you walk in, right? He's charging you 20% margin, no? How much position can you take? 5 times 20, 100 divided by 20 is 5. You can take 5 times the position. You're losing an opportunity to make money. You're losing an opportunity. This is what blinds people. You're losing an opportunity to make money. Come to me, I'll charge you only 10%. He walks into me now, he doesn't go there. Why? He will pay interest on the balance. It was exactly same, but the return that they were making was much above the interest initially. So everybody was very happy going for the debt. The fact remains is, they were making 20%, interest was roughly 9%, 11% was his pocketed return.
That's when the market was at 21, but now they are paying more than.
And that's where they have got caught. One sec, I'll come to that. Anything on margin before I continue? Now, how does the broker safeguard his position? Yeah.
That's what I was just going to ask you.
Huh.
If the shift is more than the 20,000 that Alap has got,
Huh.
then as India Bulls, the rest of the money people have.
And that's exactly where, that's the point. The broker will safeguard by going for a concept known as mark to market. I'll explain what is mark to market. That's the point I was coming to. Anything on this part before I start off? Can you quickly summarize, Antonio?
What we're trying to say is, when you put up 20,
Huh.
we're talking of
Only the margin trading part.
basically we're talking about you invest 20,
Huh.
then you have a debt of 80.
Correct.
You have some to 100 or something.
Why would you like to do such a thing?
Basically, you want to minimize your investment in the process.
Correct. And what happens because of this lever? You end up taking a higher exposure. Okay. Point taken. The time you're paying interest here, no doubt about it. But then your idea is you're going to make 100% returns, 50% returns, 60% returns on the market. What is 8%, 10%? doesn't matter. This is the thinking that happens when the market goes up, right? 50%, 60% I make, he takes 10%, max 12%, balance is mine. Now, the stock moves from, or the index moves from 18,000 to 21,000. You're plus, no problem. What if it reacts to 20,000? The question has already come in. This is where you need to understand. I'm again trying to caution you all, is exactly what's happening in commodities. Commodities, right, oil, I'll give you some startling, very startling, right, commodities, 100 million barrels is what is produced daily, 89 to 90 to be exact. You have trading to the tune of 2 billion. People are trading on 2 billion. Your production is 100 million. People are trading on 2 billion. Clearly shows speculators have gone into the market. Here exactly you saw what was happening. What happens when the market corrects itself is, the broker immediately stands up. And he says, sir, you have taken a position on the market. Let's take this case. Okay, stock was 100. Stock corrects to, let us say, stock corrects to 75. He immediately say, I am marking your position to the market. Sir, please pay an additional 5 rupees. Please pay an additional 5 rupees. What if you don't have it? Excuse me, you don't have it? I'll sell on your behalf. You don't have it. See, this is exactly what happened. In fact, they will not even wait till 75. The phone calls will start coming when it's 85. Because if it goes to 75, I am dead. You will not even take my phone call. You will go away. Your loss is 20. My loss is 5. I am answerable to a stock exchange. I'll start calling you when it is 85. Precisely when it is 90, the phone call starts. I'll keep following up. Sir, please, please, please pay. You don't pay. You don't answer my phone calls. Pretty good thing that people used to do. It was absolute chaos there. People were shit scared, right? If those who have been tracking the markets, they have lost everything, right? People have sat back, they have lost their life earnings. This is exactly what happened. Moment the broker realizes you are not going to pay up the balance, he will immediately square off the position. What is square off? Reverse the original position. He will sell on your behalf. Gone. Your 20 is gone. Suppose, no, you are a very legitimate person and you are now going to come back and answer the phone call. I'll say, please, right, your position was 100, it's now 85, can I have an additional margin? You don't have the money. Now what do? Whatever stocks you had, now this is what the second part of the story. See, one, the brokers themselves sold. Movement brokers started selling, this index actually started coming down further. Moment it started coming down further, see the fear factor now. Moment it started coming down further, again, one set of investors are gone out, they have made losses, they are out. You people were legitimate, you gave me that additional margin. But unfortunately, because I sold on behalf of some other people, though you gave me additional margin, the market has gone down further. Again I call you, I say, please give me further margin. Now watch this scenario, right? This side says, no, right? I don't have money. Immediately the broker asks this question, ठीक है, I can do two things. आपका stocks पड़ा हुआ है मेरा demat account में. You already have stocks. Can I sell and recover the money? You say yes. Again the selling pressure starts. It's come to 18. One, FIs withdrew, technical withdrawal. Second, that is okay. That is fundamental buying. They have moved out. This part that you're seeing now is that leverage effect which people were cautioning time and time again. People are saying there's a bubble, it can go up, it will immediately come down, you will be caught on the wrong foot. And exactly what happened. Moment this